Hello everyone, and welcome to episode number 75 of JustDario Cigar Time. Today is Sunday the 3rd of May, and as I'm recording this video here in Hong Kong, still we don't have any major update from the Middle East, where the standoff between the US and Iran continues. Perhaps by the time I will publish this video, something might change or something didn't. But surely the two important topics I'm going to talk about today will remain very relevant. In the first part of the video, I'm going to talk about and use Spirit Airlines as an example of how the oil supply shock is spreading faster and faster into the economy, and now is starting to seriously bite into major corporate operations. The second part of the video, I would love to talk about the incredible event that occurred this week in Japan and why that specific event, that is not going to be the last of a series that started a while ago, is making me even more bullish in the long term for gold and silver. Before we continue, don't forget to like the video, subscribe to my channel, and turn on the notifications if you don't want to miss any of my future updates. All right, so what exactly happened with Spirit Airlines this week? So just to make things quick, the U.S. airline carrier filed for bankruptcy on Saturday at 3 a.m. Eastern Times after the bailout negotiations with the U.S. government fell apart. According to the statement from the company, Spirit Airlines was not able to continue operating with the current price of jet fuel. So it folded. But hold on a second. Why didn't Spirit Airlines simply cut some flights and increase the ticket price as all the other company did so far and kept going? Well, as a matter of fact, Spirit Airlines tried to do that. But the real reason why Spirit Airlines couldn't continue to operate is because its cash reserves were not enough to purchase in advance the jet fuel that they needed to continue operating in the future, when eventually would have recovered the cost of that jet fuel through higher ticket prices. This is exactly the problem, and is becoming a cash flow problem for many companies that have to secure the crude oil supply or any derivative material today in order to run their operation, generate revenues, and then through these revenues get eventually the cash inflows that will help them to continue operating normally. And it's not a surprise that two other airlines in the US already approached the government asking for support loans in order to continue to operate. So it's not like coincidence at all that jet fuel, that as we know, has been trading in the spot market well above $150, in some regions even above $200 and $230 for more than a month now. And then the problem are becoming economical there, especially if companies not only don't have the cash buffer, but also the paper market, that usually is a tool that is, in this situation, is very handy to hedge for sudden explosion in cost and avoid exactly this cash flow problem doesn't work, because the oil market is being manipulated down, as we know, as it happened on Friday when another recycled news hit the tape exactly 1 hour before the US market opened and crashed the oil price again, even if the news was no news whatsoever. Like, Iran presented once again the exact same point to the US that the US already didn't accept. But of course, on Friday, Trump conveniently waited till market close to make it clear that he would not have accepted those terms. And on his side, he continues to remain confident that the US will emerge victorious from this situation. Something that, to be fair, is possible, it's not impossible, but is becoming more and more difficult, simply because between US and Iran, Trump doesn't have the benefit of time. Why? Because the oil shock throughout the global economy is clearly starting to impact not anymore just Southeast Asia, not anymore just Europe, where even if all the governments try their best to keep the prices low, like cutting VAT, providing incentive, releasing SPR and whatever, now the problem is spreading in the United States. So clearly between the two, Trump is a little bit more under pressure, let's say. We don't know exactly what is the economic situation in Iran, but as I shared on X this week, one thing we know is that for all the years during COVID, Iran actually dealt with only exporting 500,000 barrels of oil a day, and the price at the time was like $30 to $40. And to be fair, guys, these people have been dealing with sanctions for almost 50 years. Thinking that a naval blockade that, with all due respect, looks more like a colander rather than true war, can be effective in bending economically a country that got so used to endure incredible amount of stress for many years. I mean, it's not logic. All right. Now that we discussed the development of the oil shock, let's go on to the second part. And let's focus on what happened in Japan on Thursday. So on Thursday, the US dollar JPY exchange rate started to trade well above 160 yen per dollar. I think the high was 160.5, with WTI oil price for the front end futures at 110, and the Brent contract that would have expired in less than 24 hours trading at a high of $127. Clearly, that situation is a nightmare scenario for the Japanese government that needs to pay US dollar to buy crude oil. Brent is the benchmark that is being used in Japan to purchase crude oil, and the price of the Brent was skyrocketing. So the government decided to intervene. And even if they tried to deny that for several hours, I said that immediately. That was an intervention, because just jawboning the market, that threatening them, you're about to intervene, you're not going to move the exchange rate, 1 bit figure, 2 bit figure. We saw a move at some point of almost 5 big figures. And coincidentally, when that happened, at the same time, the price of the Brent that would have stopped to trade in a few hours crashed from $127 to almost $110 dollar. An incredible move in the paper market, clearly caused by all this shenanigans triggered by Japan, that, among other things, also said, we are keeping an eye on the oil market as well, because we will not tolerate speculation on oil futures. In the same way, we don't tolerate speculation on the Japanese yen. I mean, come on, I started to talk about this years ago, and the situation now, it became ridiculous to a point that even Wall Street cannot ignore anymore. And on Friday, of course, we saw the JPY resuming to lose ground again, and everyone agreeing on the fact that if nothing structural changes in the Japanese economy, if the Bank of Japan doesn't manage to find the gut to hike rates to a level high enough to effectively start draining liquidity from its own domestic economy to begin with, the pressure on the JPY to devalue will remain there. But of course, the government doesn't care, because if you get into the situation where the cost of money is becoming so expensive, your budget flexibility and the possibility to continue spending with the central bank monetizing all that spending becomes very limited, if not impossible to achieve. And going a little bit into the details, it's quite funny to see how on Thursday, Japan effectively spent almost 5 trillion JPY equivalent in US dollar to repurchase those JPY in the open market, effectively selling dollar. That so far it has been a little bit unclear where they took it, because we don't have the latest update on the Federal Reserve of New York central bank swap lines, and there have not been major market movements on Thursday. But then besides this, on Friday, the Japanese government went into the market to issue the exact same amount in short-term bills. I mean, you see what's happening here. On one side, they take away JPY from the market, spending money from their currency reserves. And on the other side, then, boom, they ended up throwing back that money into the market. But again, be careful. This is not a zero-sum game, because effectively, if you pay attention, they sold liquidity, dollar, into the system. And that's equivalent to injecting liquidity that is almost 35 billion like this in the global system. And what does that create? Monetary inflation. And of course, this amount of monetary inflation, combined with Kevin Walsh, that is about to start his tenure as Federal Reserve Chairman with a strong mandate to cut rates and keep the financial conditions very loose, continue to printing currency into the system. The Fed is already printing roughly $40 billion a month already into the economy, but they're not calling it QE. They're calling it like reserves management, whatever crap. Nevertheless, money is being printed into the economy at a rate that is incredible, considering that we're not even officially into a recession, that there has not been any sharp market correction whatsoever, and no other specific need to justify this relentless money printing, except to keep financial assets inflated. As we know, financial assets inflation is a little bit of a game of chicken within the economy, because on one side, nominally, you give the impression that everything is going great, But then in the real economy, you keep getting this data that people, standard of living, the purchasing power of the fiat money, other important metrics are actually deteriorating at a faster and faster pace. So ultimately, this is going to be very bullish, even more than where we already right now, where the price of gold and silver are not reflecting yet whatsoever all the amount of money printing that for sure has been injected into the economy since COVID, because that money is still trapped a lot into overinflated stocks that are going above and beyond any possible justifiable valuation. I mean, this week, the Japanese toilet company Toto announced they will enter into the AI space, and the stock popped 18%. With the market quickly forgetting that the company, a few days earlier, announced they would have stopped accepting orders from clients because they are suffering a crisis in sourcing the raw material in order to continue producing their toilets, right? Because of what's happening in the Middle East. But just use those two letters, AI, and people go nuts. This extreme sign of exuberance paired with money printing, paired with government that cannot stomach whatsoever a proper and healthy correction in the market, it's extremely bullish for precious metals. For sure for gold, that remains incredibly bid by major central banks throughout the world, especially China, and silver, that more and more is becoming such an obvious alternative for dealing with the crisis in the Middle East. Why? Because everything that is on high performing electronic components, from batteries, solar panels, from like energy efficient data centers, electronic goods, and whatever, requires silver, that is the best electricity conductor available. And at these prices remains very cheap. So combine all of this together, and even major Wall Street banks are starting to fold and acknowledge how there is an incredible trust that can begin at any moment and prop gold and silver to level that no one would even have at the back of their mind right now. JP Morgan even predicted that in the best case scenario, gold can even trade at $14,000 an ounce in the foreseeable future. But once again, things are becoming obvious to an extent that they are undeniable. So why do we have to try to pretend and ignore all this data? I mean, we are seeing how things are developing into the economy. So eventually, as I said, I would personally wait for the last, perhaps, buying opportunity, the last dip available in the market. It will eventually occur when the oil shock is going to be taken in proper consideration by investors, because starting from that point in time, the money printing and the government scramble to keep everything is inflated is going to inject so much liquidity into the economy that gold and silver can only fly. Thanks a lot for listening to my podcast again today, for supporting me on X, on Instagram, and for reading my research on JustDario.com. I wish everyone a happy Sunday and a nice week ahead.